Hello learners, welcome back to our lesson today. Today we are going to look at an accounting question that reads, the following balances were extracted from the books of Wanji traders for the year ended 30th June 2005. So we have debtors, creditors, machinery, cash in hand, cash at bank, 5-year loan, and stock. So you're required to prepare a balance sheet of Wanji traders as at 30th June 2005. Now learners, the first thing you need to do before tackling this kind of a question is you try to go through the question and classify the items that you're given. For instance, for the debtors, that's assets, actually current assets. Creditors is a current liability or a short-term liability. Machinery is a fixed asset. Cash in hand is a current asset. And cash at bank is also a current asset. 5-year loan is a long-term liability, and stock is a current asset. Now, by so doing, preparing a balance sheet would be very easy for you. So you start off. First thing is the heading, whereby in the heading we should write the name of the business, that is Wanji Traders. What are we preparing? Balance sheet. Then, as at 30th, the date follows 30th June 2005. Now, a balance sheet takes the form of a capital T. Whereby on the left hand side you record assets, on the right hand side we record capital and liabilities. So we start off with the fixed assets. Fixed assets. So the first fixed assets we have is machinery. Machinery, actually, that is the only one that you have. So 450,000. 450,000. Then we move on to the current assets. Current assets. And the current asset, the first one we have stock. Stock, which is 60,000. We have debtors, 120,000. Then next one is cash at bank. Cash at bank. Cash at bank, which is 180,000. And followed by cash in hand, which is 70,000. So the total current assets is 60 plus 120, that is 180, plus 180, that is 360, plus 70, we have 360, plus 70, yeah, 360 plus 70 to give us 430. 430,000. Now, on this other side, we said we record capital and liabilities. Let's start off with capital. The amount for capital, this case is, we are not given. Actually, we are not given capital. So we move on. Liabilities, we have long-term liabilities. Long-term liabilities. So under long-term liabilities, we have 5-year loan. 5-year loan. 5-year loan, which is 270,000. Then short-term liabilities. Short-term liabilities. Short-term liabilities, whereby we have creditors. And creditors is 60,000. 60,000. Now that we are not given the value for capital, how do we get capital? Now, simply capital will be given by, we use the bookkeeping equation, that is asset is equals to capital plus liabilities. So our total assets is 430 plus 450 to give us 880,000. So our asset is 880,000. And then liabilities, total liabilities is 270 plus 60,000 to give us 330,000. 330,000. Remember from this, from this equation, asset equals to capital plus liabilities. It is easy to make capital the subject, so that you have capital now will be given by assets minus liabilities, and that is exactly what I'm doing. 880,000 minus 330, this gives us 5, and this is 5. So this is the figure that you're going to use for capital. So back to our balance sheet. So this is 550,000. 550,000. Then we can balance. Can close our account. The double underscore shows that you have closed your account. So you have 450 plus 430 to give us 830,000. 830,000. And then for capital plus this should give us this figure. Let's see. So 550 plus 330 actually should give us 880,000. Therefore, learners, that is our answer. That is how you're supposed to prepare your balance sheet. So clearly you can see that's the question, and that is our working. Goodbye for now. See you in our next lesson.